Hey everybody, this is Dr. Tom Carr, aka Dr. Stocks of DrStoxx.com. That's DrStoxx.com. And I'm coming to you today live from our options room. If you want to join me and a whole bunch of great traders at all different levels of experience with options, if you want to see what I'm trading throughout the day, I give you my entry price, ticker symbol, stop price, target price, reasons for the trade, technical chart, and all the rest, plus a lot of great conversation and training along the way. Go to DrStoxx.com, click on the subscribe menu, scroll down to the live options room. And if you want to add on our flagship room, the live trading room, where we do stocks and ETFs and micro E-minis, you can do that at a 40% discount. All right, so market's kind of falling today, and I really want to jump back into the trading room to make sure we're well positioned for this move. Not unexpected at all. It got triggered yesterday when Fed Chair Powell was giving a speech, and he talked about how he thought the market was overvalued. Thank you, Fed Chair Powell. It's not really your job to worry about the market's valuation, but thank you for contributing that. And we're down about 1.5% from those comments in the major indexes, and a lot more than that in some of the major stocks. So words have consequences, right? Especially when millions are watching you and the market is open while you're talking. In any case, it is what it is. And we were kind of due a bit of a pullback anyway. We're in the seasonal period of weakness. The last 2 weeks of September is usually when market gets a little more volatile. October being a very good month usually for the market. So we're close to that. And we got a little bit too high, a little too far too fast to the upside, where valuations got a little bit behind the price. So yeah, that happens. Every time you get people getting greedy, the market goes up too high, and every time you get people getting fearful, the market falls down too low. And one of the things we need to do as traders is recognize when it is too high and too low, right? We avoid those things where we buy the low dip or we sell short the big rip. All right, so I'm not going to talk about indexes. Here's the thing I'm going to talk about today, just one thing. And I'm going to go over to a chart of Amazon as an example of what I'm talking about. All right, so Amazon right here is in an uptrend. It's not a really great uptrend, but it is pretty consistent with the other mag stocks and very consistent with the NASDAQ 100. We're seeing very similar kinds of setups here. So it's in an uptrend. How do we know? Well, the LRC, the linear regression channel, is moving higher. That's a 100-day look back period. So over the last 3 months or quarter, Amazon has been trending higher. The 21 EMA, which is this blue line, is above the 50. That in and of itself tells us we were in a short-term uptrend, and the 50 is well above the 200, which tells us we're in a longer-term uptrend. And all three of those, I should say 2 out of the 3 are uptrending, although it looks like the 50 is just now starting to flatten out. So all of those signal that we are in an uptrend. And clearly, after hitting new all-time highs a couple of weeks ago, Amazon is now in a pullback. And the question I'm throwing out that I will answer today is, when do you know to buy the dip and at what price? Okay, rule number 1, just as a general rule, never look at buying the dip in a downtrend. If you have a lot of trading experience, there are times when you can do that. But for the most part, you want to look for stocks already in an uptrend that are pulling back in that uptrend, not ruining the uptrend, not breaking major lines of support, but just pulling back to an area where you can look at buying at a discount, right? If you had bought up here at 240 or so, 238, if you had bought at 238, you'd be well underwater. You're now 18 points underwater. That's about 8-9%. You don't want that, right? You don't want to buy the highs. You don't want to be a bag holder and sit with a drawdown for 3 or 4 or 5 weeks. No, you want to buy at a lower price at a discount. Right? That's usually where the best trades are where they start. Right? The best trades start from deep down. Here's a big gap down on earnings. I don't usually recommend buying gap downs on earnings, but it was already in an uptrend. The earnings were very good, and the fact that it ripped right back up to close that gap very quickly is a very good sign for the overall company of Amazon. Now, here's one thing I'm on going to make an appearance on IBD Live this Friday, and one of the things I'm going to say about Amazon is that there are several quadrants of technology sectors that are very, very popular these days. AI, of course, quantum computing or high performance computing is another. Um, the cloud and the neo cloud, which is kind of like a supercharged cloud. And then you've got software and supporting infrastructure plays that feed into those things. Oh, and data centers. Those are sort of the 4, 5, 6 different tech sectors that are really doing really well. And if you made a Venn diagram of the key companies in each of those sectors and noted where there's an overlap of companies that are involved in a variety of those different spaces, Amazon is going to be one of those companies alongside Microsoft and Google. Maybe Nvidia will be in there for most part as well. But those three are kind of the companies that have the biggest footprint in the greatest number of hot tech sectors. So, and you look at those three, Amazon, Google, and Microsoft, and you're going to see better valuations with Amazon. You're going to see a greater capacity for scaling higher with Amazon, and you're going to see a product line, namely the AWS, that is growing faster than anything offered by Google or Amazon. Microsoft. Google and Microsoft, of course, great companies. I'm not, um, pushing you away from investing in those, but Amazon has the greatest amount of leverage moving higher. So, we want to look at where do we buy the dip? Well, obviously, it isn't a dip, and it did crack through some previous levels of support, right? So here's an intraday bounce off the 50-period moving average. It cracked through that yesterday. Here is an intraday low that got all the way down to near the pink zone. It cracked that yesterday, gapped up this morning. Things looked pretty good for a little while, and then it was right back down to print a new low, a lower low today. Well, then we move out a little bit further and we see a cluster of pivot lows here a few weeks back and then a couple of weeks later after that. And that's kind of where we're at. It's where we're at right now. So we're kind of hitting those levels of support. So two things that you can do with the daily chart before we get down and look at some of the intraday charts. Look for pivot levels of support. Price getting down to a level and bouncing very quickly and very sharply and decisively, and it's even better if it's on volume, from that level. Got back down to the same level, bounced right back up again very nicely, all the way up to new all-time highs. Now, we are back down to that same level. The last two times we were there, the market bounced, right? Amazon bounced very cleanly. So that's one thing you can do. Look for horizontal levels of support. You can also draw in trend lines, but I always say this to my clients. Horizontal lines of support, what we would call channel lines, are always much stronger as levels of support than the slanted trend lines, right? Trend lines can be fairly, viable levels of support, but the sharper the trend line, right, the closer it is to vertical, the less likely it is to act as support. So trend lines that approximate more of your horizontal lines, your channel lines, are the stronger lines of support. So I would rather just forget trend lines altogether. Trend lines break and rise back up again. They bounce off trend lines and they're back down again. So I would, for the most part, to make things simple, ignore trend lines, look at channel lines, and use those as your key levels of support. Now, it is possible that we do get continuation to the downside, and so we would want to pick out maybe one more level of support, and it would be down here, and that's quite a ways down, right? You've got to get through, you've got to get, first of all, well below the linear regression channel. The outer edge of this channel, the outer edge of this pink zone and the outer edge of this powder blue zone, that's at the 2.0 standard deviation, which is to say that about 95% of all price movement of Amazon over the last 100 days has been contained within those channels, the linear regression channel, and now we're below it. So only 5% of the time Amazon gets below or above the linear regression channel. So do you think it's going to stay outside or below the linear channel for very long? No, it's not. So pretty good chance that we're at a level of price support from which it bounced very strongly. That we're there. We're already there. You could be out buying some Amazon, just as I did. Now, I actually bought it. I put in the order last night after I saw yesterday's big red stick and figured out where are some intraday levels of support. I put in a limit order there with a good till cancel conditional on it, and it triggered during the market today. So I'm actually in Amazon. I think it's a little bit above where I bought it, and I'll show you that in just a minute. Now, again, you have your next level of support in case things do get horrible. But really, if since I'm in this trade and I've got to stop not too low, not too far below today's low, I will be out of that trade if it goes any further down. Okay, now let me show you another tool. One more tool that you can use on the daily chart. It's called the Fibonacci retracement tool. And if you're using TradingView, you go over to the left sidebar, click on this little icon right here. This is your fib retrace. Now, with the fib retrace tool, there's a little bit of a trick to it because you first of all have to learn, or you have to know where the current trend began and where it topped out. And that's not always clear, right, from the chart. Sometimes you have a whole cluster of lows and you're not sure which one of those is, in fact, where the uptrend started. You have a cluster of highs. You're not exactly sure where the uptrend stopped and started to pull back. So that's a little bit of a trick. One of the things you can do to make that a little easier, make your job easier, is to go over to indicators and search for pivot prices, pivot points, high and low. There it is, right there. There are a whole bunch of these different pivot points. I just use this one at the top of the list. And what it does is that it determines the pivot points for you. But you don't really have to figure out. Now, this is the pivot high, clearly 238.85. And I'm going to say that this is a new uptrend that started on the day after earnings, right? That's the low, I'm not even sure what that is there, 211 something. So after earnings, there was a kind of an erasure of the board, and a new trend is starting. Clearly, the old trend was off of the April lows way down here, and it topped out here at 236. We had earnings. We had a revaluation of the whole company's business model for whatever reason. Market didn't like what it heard, but in fact, the earnings were pretty good. And that's a new uptrend. So we've got a new uptrend. We've got our first major pullback. All right, so when you have those numbers in place, then you go over to your fib retracement tool. You start it down here by the click of the mouse at the bottom, right? The start of the new uptrend at the very lowest price possible. And you just drag it up. You put that little cursor over the top of the intraday high, 238.85. And then you're going to get these bars that come off here, and I have them extended out to the right. So that's a feature you might have to toggle on in the settings of that. But anyway, I've got them set, and you can set them at different levels, but I've got them set at the standard Fibonacci retracement levels, 382, 0.5, right, halfway down. So a retracement of 50% is a half. You've come halfway down from the bottom to the top. You've come halfway down at that's a 0.5. The next fib retrace is 618. And then I have two numbers down here, the 786 and the 826. And the little space down in there between is called the professional money bar. The professional money bar, this is maybe more legend than fact, but the professional money bar is typically thought of as the place where funds are out buying in great size key stocks, right? They're not going to buy some little penny stock at that level, but they're going to buy Microsoft and Google and Apple when they fall down to that little low line there. And that doesn't happen very often. Once or twice a year, you might get a big major company to fall all the way down to that level. I prefer to buy in what I call the money zone. You have two money zones. You have your strong money zone, and I would call it your kind of second chance money zone. And the first money zone, the strong one, is between 0.5 and 618. That's why I have it a light green color there. That's typically where you get price coming down on a pullback. It starts to go a little sideways for a while, and then it starts to bounce up. And when it starts to bounce up, that's where you would buy it. Amazon, however, went right through that one, and now we're in the second chance money zone. And I'm thinking, it's Amazon. This has got to be a good hold, right? It's a pretty low risk way of making a trade. So you buy it down here at the previous two levels of lows, from which the stock bounced very cleanly and strongly. We're back down there again, and it even an added bonus is that it's also in the secondary money zone. So now it's at 220, right? I would put a stop at about 217, 217.50 for a fairly low risk trade. And where is your target going to be? It's going to be back up here in this cluster of prices where stocks were formerly at support. Now they're down below that. And you've also got the 50 period moving average and the 21, kind of all in that same general area, about 229. So a trade from 220 to 229 is on upside, and a downside of 2.5 points. That's a very good looking, 4-to-1 risk to reward ratio. All right, so that's Amazon. I wanted to show you one more that I did, and I'll show you this one with the intraday prices. So I am long Oscar on the big dip that happened, and I actually got filled on this one in after hours trading. And if you're going to use a limit order, right, at a certain level of support, you put a good till cancel on it, and then you can also toggle on that you wanted to execute after hours. And in that case, you might really get a very nice entry, because after hours trading can be really erratic. So if you put it a little bit lower than you might normally think it will go to, because in after hours trading, you're more likely to get filled than you are during the market hours. Okay, so I like this. It's a fairly soft uptrend. I'm not a real big fan of the company, but it is in a good space, right? This is the health tech space, and you've got several good plays in that space. HIMS, and I would put Lemond there in LMND in that same space. Hinge, HNGE is in that space. These are all companies that are disruptors of the healthcare industry and bringing their platforms, their software, and their infrastructure to make the healthcare industry more efficient, or more, I don't know what, AI friendly. But in any case, Oscar is in that space, right? It's a health tech space, a health tech play. So you've got the 21 period moving average well above the 50. 50 is well above the 200. 200's flat, but the 50's up, the 21 is up, and the LRC is in a slight uptrend. So the price just really went high and very fast, right? From 13 to 20, 21 almost, very quickly. And now it's come down as a pullback. It's come down in a retracement. And it's a bonus that it is forming this tight wedge here. This is a symmetrical triangle. Prices are consolidating. The highs are getting a little bit lower. The lows are getting a little bit higher. And when price crunches tightly like that, the breakout is imminent. And the tighter the crunch, the bigger the breakout. And usually you expect the breakout to happen in the direction of the prevailing trend, which is up. So we're looking for an upside breakout. Now, I didn't even apply let me get rid of these lines first of all. I did not apply the Fibonacci retracement to this one. So let's see if that would have helped me. Here's the beginning of the trend at 13. Here's your upside up here at 20 something. Yeah, so this is actually such a strong trend that while it did come down and tag the 50, you see how it tagged the 50 and bounced right back up. That was a few days ago, and I wasn't looking at it a few days ago. I was looking at it yesterday, thinking that yesterday was a pretty good time to buy because it was down at the bottom of that supporting trend line of the wedge, right? And look, yesterday was also at the 38, right at the top of the 38. So your strongest trends, this is a very short-term strong trend, right? Amazon is kind of a long-term strong trend, but this one is very short-term strong trend. The strongest trends will only come down to the 38, and then they bounce right back up again. That's pretty much what happened. But for an entry, I didn't use the fib tool, and I didn't even look at the daily chart. I went over to the either the 2 hour or the 1 hour. I'm forgetting which one. Doesn't really matter. We can do them both. All right. So here's the same linear regression channel on the 2 hour side. You can see it's uptrending very nicely. The price yesterday toward the close came down into the pink zone. It went quite a bit, all the way down to 1762. 1762 was the lowest low yesterday on that long red bar that we saw that hit the supporting trend line and stopped. It actually bumped up a little bit by the close yesterday. Now let me see my entry. Where did I buy this one? 1790. I bought it at 1790. So I think what I'm actually blanking now on exactly how I did this, but this close right here, and today's open, they were all at around 1776. And I guess I got in at 1790, so that would be a bit above those three and well above yesterday's low. So I'm kind of forgetting how I got into this trade. Maybe it was on this bar right here. This bar. Oh, yeah, that's it. Okay, so I actually got filled yesterday, not today. It was yesterday. So this bar came all the way down to 1790. It stopped, and then it opened at 1790 the next day, and then it rallied back up quite sharply. The high of this bar is up here at 1827, and that was toward the close, the last couple hours of trading, right? The last 2 hours of trading, 2 to 4 o'clock. It was during that time, it's up here at like 1820, 25, that I put in my good till cancel limit order at 1790 to be filled outside of market hours, and I got filled somewhere in that same time space, somewhere before the close yesterday. So actually I was a little bit underwater at the close of yesterday and a little bit underwater at the open today, but as you can see, it's been all upside, and now I'm nicely profitable. Okay, so I hope I haven't horribly confused you, but on the daily chart, you can use channel lines at former areas of support that bounced cleanly, sharply, right? To put your good till cancel limit orders, you can start buying at that level. Again, I would kind of piece in, right? Don't buy all at once. Just put in a little bit there and maybe a little bit lower and a little bit lower still. Or you can drill down to the 2 hour chart. You can look at some of the intraday levels of support. You can look at where did that bar close? Where did it open at the next bar? And then if if the current price is a little bit above that level, put your good till cancel limit order down at that level, because chances are pretty good in a pullback like this that it's going to come back and pick you up, and then you're off to the races the next day. All right, guys, I'm going to let you go. I will produce this. I'll stick a link in the main room, and we'll go from there. We'll trade the last hour and a half together. God bless everybody. Have a great rest of the afternoon, and we'll see you in the room in just a little bit.